Today, Bitcoin briefly drops below $20,000 after regulators shut down Silicon Valley Bank. JP Morgan analysts warn the end of the Silvergate exchange network creates a challenge for the crypto ecosystem. And Patrick Hillmann of Binance addresses all the recent allegations against the world's largest crypto exchange. Welcome to CNBC's Crypto World. I'm Jordan Smith. Bitcoin and Ether took a small hit to end the week. As of noon Eastern, Bitcoin dropped more than 2%, trading just above $20,000 after falling below that level to a nearly two-month low earlier in the day. Ether fell more than 2.5%, trading just above the $1,400 mark. Those moves came amid a broader sell-off in U.S. equities led by the now shuttered Silicon Valley Bank. A mixed February jobs report also weighed on prices. Bitcoin and Ether were both down for the week, alongside the S&P 500. Okay, let's talk about the top stories. Now, Bitcoin's losses pale in comparison to the double-digit drop in shares of crypto bank Signature. That stock dropped as much as 32% and at one point was halted amid a sell-off in bank stocks that continued for a second day. The initial move followed the announcement earlier this week that Silvergate would liquidate. Then losses deepened today after financial regulators shut down SVB. For Signature's part, it says it has minimal exposure to crypto, but with so much uncertainty in financial services, investors fled from Signature stock anyway. Next, an analyst at JP Morgan is warning the collapse of Silvergate Bank and the discontinuation of the Silvergate exchange network represent another setback for the crypto industry. Exactly 1 week ago, Silvergate said it had terminated SEN, which enabled transfers between investors and crypto exchanges at any time, unlike traditional bank wires, which could take days to settle. This report out yesterday noted that the FTX collapse and the failure of several crypto entities since then took their toll on Silvergate Bank, which JP Morgan called a key intermediary of the crypto ecosystem. The bank pointed out Silvergate suffered from the abrupt withdrawal of deposits in recent months, and analysts noted that Silvergate had operated as a gateway for more than 1,000 institutional crypto market participants, including major crypto exchanges, miners, stablecoin issuers, market makers, and digital asset fund managers that have been using its network to transfer fiat currency between their Silvergate accounts and the accounts of other Silvergate customers. The analysts then argued that replacing this instantaneous network for processing dollar deposits and withdrawals among crypto market participants will be tough given the current backdrop and the general unwillingness of traditional banks to engage with crypto companies following the FTX collapse and given high regulatory pressures. Last, the New York Attorney General labeled Ether a security, and that categorization classifies the cryptocurrency with assets like stocks and bonds and fueled fears of a wider regulatory crackdown. In a filing made public yesterday, Letitia James referred to Ether as a security in her lawsuit against KuCoin for failing to register with the state before facilitating crypto transactions on its platform. The digital asset industry and regulators have been in disagreement over the categorization of crypto assets as securities, which would subject crypto companies to stricter oversight. Ether fell to its lowest level in 2 months today on the heels of that filing. All right, on to our main story. Binance, the world's largest crypto exchange by volume, has continued to make headlines recently. Just this week, the crypto exchange was accused of being much more connected with its American entity than previously disclosed. This Wall Street Journal story claims that Binance developers in China maintain the software code supporting Binance US users' digital wallets, potentially giving Binance access to US customer data. Crypto World's Talia Kaplan spoke with Binance's chief strategy officer to address all the recent allegations.
The Wall Street Journal reported this week that Binance and Binance US are more intertwined than the companies have disclosed, mixing staff and finances and sharing an affiliated entity that bought and sold digital assets. A Binance spokesperson responded to my request for comment, stressing that the two are, quote, separate legal entities. What would you say in response to that allegation?
Well, they are separate legal entities. I mean, there is no way around this. I mean, let me just be really transparent on this. I think there's been some confusion, and it's been reported in the past that somehow the way that it was set up was a way to get around regulations. You cannot get around regulations. You cannot get around being regulated. If you have users in the U.S. market, you are going to be held to that account. And so for Binance, once we turned on KYC and once you start to understand where you have users, you then have to get licenses. And in order to get licenses in the US, you have to be able to file for those registrations. Binance had grown tremendously over the previous 2 years and had a very complex governance structure that we had to completely work to unwind over the last couple of years. And it just would have taken a long time for Binance to be able to go, Binance.com to be able to go and get those licenses. So, the owner of our company, CZ, decided that he wanted to go and set up his own separate company in the US. And that's exactly what he did. And he did that in coordination with two major U.S. law firms who walked him through the entire process and helped him set up Binance.us. And today, we do operate completely separate. We have a marketing agreement where they share the Binance name and where we, will coordinate on major campaigns like the weekend. But that's it. In the early days, CZ, when he was setting up Binance.us, he hired as a consultancy some of our internal project managers to help them set up the infrastructure for the exchange. That's a service that we had provided and still provide to this day, where we will help set up other exchanges and basically whitelist our backend system. And so that is exactly what the Wall Street Journal was looking at when they were seeing the messages going back and forth. It was just that consulting sort of service. And a lot of exchanges do that. That's nothing that's atypical. And so, the companies are very separate. We actually disagree with each other quite a bit. We even have really heated discussions on rare occasion because we don't necessarily always align with one another when it comes to things like global regulatory policy, et cetera. So, all I can say is that, Binance.us and Binance.com, they're separate entities because they have to be. There's nothing really that, we can say more than that, other than what regulators will come out and clarify in the weeks and months ahead. But we feel, fairly confident that it was set up in the appropriate manner and that we are very confident today that they operate completely separately.
So that Wall Street Journal article also alleged that Binance put together a plan to avoid the threat of prosecution by U.S. authorities as it started its American entity in 2019, and that Binance executives warned that any lawsuit from U.S. regulators would be like, quote, nuclear fallout for the firm's business and its officers. What is your response?
An external consultant submitted a plan that they thought at the time was a smart strategy. That plan was run past the attorneys who were helping to set up Binance.us, and the attorneys said that that was in no way a plan that could operate effectively in the U.S. market, and so it was immediately abandoned. As far as not wanting to get sideways with U.S. regulators, of course, you want to be in compliance with regulators. I think there's been a misunderstanding about Binance and other exchanges and what we think the role of regulations is. Regulations are good for this industry. I know that can be tough to hear for some folks, particularly those that started out in crypto very early on. But smart regulations are going to help build trust with users and help bring in that first billion sort of user base. Until we have really smart regulations and really defined regulations, users are not going to feel comfortable entering the marketplace yet. And that's why, policy frameworks like MiCA that we've just seen the EU pull together are so critical for us. Is MiCA perfect? No, it's not perfect from a business standpoint, but it provides clarity. And once an organization understands what is expected of them, what their responsibility is, and what the framework is that they have to work within, we can adjust our business models. Right now in the US, we simply don't have that. And so for us, we want to make sure that we're always in compliance. We're hoping the US market is going to catch up really quick to Europe, and that this won't be another case of GDPR where Europe really sets the global agenda and everyone else just has to follow. Hopefully the US market is going to be hot on their heels, and we'll see some innovative policymaking here in the US as well.
Are you confident that Binance will survive the ongoing regulatory crackdown by global regulators? Citing you, the Wall Street Journal reported last month that Binance is bracing itself from fines from U.S. regulators to settle past conduct and is prepared to pay those penalties to make amends for past regulatory violations. Are you, in fact, prepared to pay those potential fines?
We are prepared to deal with ever remediations regulators feel are necessary. That's a part of doing business in a highly regulated industry. Let's just be really clear here. These types of regulatory actions are also held against traditional banks like Goldman Sachs this year, Deutsche Bank, HSBC. This is not an irregular or a crypto-specific matter. And so we are prepared to do whatever we need to ensure that regulators continue to trust our platform and they know that we are continuing to do the right thing. We're a very different company than we were 2 years ago. we have fundamentally changed just where we're investing, how we invest in compliance, how we've built our systems. We have over 750 compliance officers now working across the globe, including 80 former very senior federal law enforcement officials from the US, from Europe, from places like the IRS, the SEC, Europol. And so the company today has, I think, built up a lot of goodwill with regulators. Now we just need to make amends for those shortcomings that we had in the first 2 years that they were in operation.
This month, a group of U.S. senators accused Binance of being a, quote, hotbed for illegal financial activity. The senators asked Binance and its U.S. partner for information about their regulatory compliance and finances. What was your reaction to those allegations, and does Binance plan on fulfilling their request?
We are absolutely going to fulfill their requests and provide them additional information. In crypto, you can look and you can see, okay, here's some illicit funds. If this wallet interacted with that wallet that we've tagged as illicit, maybe this wallet is illicit, maybe this wallet's illicit, and you can map out whole criminal entities. That means that crypto is one of the most powerful tools that law enforcement has ever had access to, because that type of law enforcement activity would take years, if not decades, to be able to do in the traditional banking system. And so when someone says, oh, $10 billion in illicit funds potentially went through Binance last year, A, that number is extraordinarily overflated because that includes both direct and indirect. And B, because it's so transparent, it means that we can actually put an end to it, which is why, as a percentage of total volume, we see illicit funds are going down, 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 down over time in crypto. Because it's a horrible place to try and do illicit business, because you can run on the blockchain, but you can't hide. You will get caught. We just helped and supported a major DEA bust of the cartels in Mexico. And once they were able to identify one wallet, our investigators were able to work with the DEA to map out an entire network of wallets owned by the cartels and shut them down overnight. That type of law enforcement action is not possible in a closed system, a black box like traditional finance is. And so I have to ask the question, do we not want to have more transparency in banking? Do we not want this type of illicit activity to be able to capture more quickly? Or do we want to push it back into the sort of dark corners of traditional finance, where reporters and law enforcement have to spend years, if not decades, going through countless subpoenas to try and get access to this information? So we think this is a feature, not a bug. Unfortunately, a lot of the general public doesn't understand that.
By the way, we reached out to the DEA to see if Binance was in fact integral in helping the agency with its investigation into a Mexican drug cartel, but they told us they were unable to comment on this matter. That's all for Crypto World this week. We'll be back again on Monday, and we'll see you then.